Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with the market recap. It is Wednesday. It is the 29th of May. The S&P breaking down below 28, showing some resilience after gapping down on the open. Hard to be super positive, but it didn't tank coming off of the lows. The rut closing below 15 here as well. The Dow breaking support. So a lot of things breaking support here as the day got going. It was really kind of back and forth from there, as seems like traders weren't quite sure where to go. But I do think it gives, at least for my trading rules, gives me an idea of where to be looking bearish, which we'll talk about as we kind of move forward here today. And welcome out, everybody. Hope you had a great day both in and out of the market. As it's Wednesday, it was a short week, but I keep wanting to say it's Thursday. It always messes me up. So quickly on the earnings front, not a particularly huge slate coming here before tomorrow's open. But you do have Keysight, Technologies, and PVH reporting here tonight, and then Dollar General and Dollar Tree reporting here tomorrow, S&P 500 companies, that is. So fairly light on the earnings side of things, but a few names out there. You saw some of the retail names, while not S&P 500 companies. Abercrombie and Fitch really dropped on earnings here today. You had Dick's Sporting Goods really dropping. So, always a good idea to keep an eye on those earnings. And good afternoon, Emily, and good afternoon, Adib. Good to see you as always. Hope it was a good day for you. Certainly was definitely a good day for the bearish trades that you had going into today. That's for the most part, although it really did kind of shift a little bit on the intraday. Here we are on the S&P 500. Our gap down, trading, of course, in the after hours market, gapping down clearly below 28. Took a few candlesticks on this 15-minute time frame to really get moving. But once it did, we really started to sell pretty quickly. And then throughout the rest of the day, we actually kind of showed a little bit of resiliency. Now, this is just today's candlestick, that we're looking at on the 15-minute time frame. Per my trading rules, as many of you guys know, a break to me is a close followed by continuation the next day. I've got the close. I've got the close on pretty much all the indexes except the NASDAQ. And hi, Marie. Good morning to you, Lloyd. Hope you are doing well, and welcome out to the Theta Queen, Marie. Good to see you again. Hope you had a great day here. For my rules, it's always, close and then continuation. All right, I'm a little, bit, we all have our different rules. Here's the close. I'm going to have to use today's candlestick as that confirmation. For me, at least, breaking today's low would be confirmation to the downside pretty much across the board on the indexes. Now, interestingly enough, and we'll take a look at a couple of them, there are still some interesting bullish setups. And I don't know about you guys, but as kind of the month has drug on, certainly more bearish on the market than we started the month. I think everyone would probably agree with that. So now, looking for some potential bullish delta. All of a sudden, lots of breaks have already happened, as you guys are very aware. Even more are kind of knocking on the door. So there's some interesting bull setups out there too. Lots of breakdowns or things that have broken down on the bearish side of things. On the S&P, did kind of catch that 200, kind of that acted at least as a little bit of something here today. So for me, really, it's just going to come down to today's low at 27.67, I believe it was, for that confirmation. If that confirmation is given to me here tomorrow, I'm going to call us in a downward trend on the shorter term time frame. We've made lower highs and lower lows. I don't think anybody can dispute that, whether they like to or not. I think the next support zone really is worth noting, at least. I mean, anything could potentially, we all know that, but really as far as historical price, especially recently, 27.20, that ballpark is kind of that next level of support that I will be looking at. On the other side of things, as long as we're below 28, I think that's kind of that first line in the sand, and this is, we certainly took that out here today. Anything below that, I do think we have to be a little bit cautious in anything really that we're looking to buy. And that doesn't mean I won't be open to it. I always try to listen to the charts. They usually are better at the job than me. So 28 certainly going to be that first level of resistance, but really from a swing perspective, really nothing has changed. Still up there at 28.90 is where we're going to be. And good afternoon, Scott. Hello there, Majin. Great to see you guys as always. Interesting day. I mean, it was really the gap down and the movement, shortly thereafter kind of offset by that late day. Hey, you know what? Maybe we'll buy a little bit or at least not sell. Kind of an interesting day of price action. And good afternoon to you, Ilka. Great to see you, my friend. Hope you are well. Over on the Dow, it was certainly the ugliest early, and it had a little more room than the S&P, but that didn't seem to matter. Gapping right below that support here on the open, much like the rest of the market, we did come off of the lows of the day, creating a pretty decent tail here. And so we can kind of look at this candle. Just looking at the candle, there's at least a little bullishness to the market candle out here today with these long shadows or wicks that we're able to put in. If it wasn't for the placement, but we're right below the breakdown point. If this was sitting on a rising 20-day moving average, it might be a candle that would, maybe we see some upward movement tomorrow, I might want to buy. But with the placement of where we're at, I have a hard time wanting to do that too dramatically, even if that is the way that the market wants to move. So again, this probably, we talked about it, probably in my mind has the most room. We don't really have a lot of support until into about 24.2 down here. So we have some room to go before a level of support. Now, maybe something does develop, of course, but currently I just don't really see anything. Oh yeah, that should hold. And we're looking at these indexes, even if we're looking at these weekly time frames, taking out these levels is taking out any of the, more traditional 20, 50 day or week moving averages. Not really a lot of support that I can see that, oh yeah, that should present a big fight. Really the only thing that I see that, should be tough to battle is way the heck down there at 24.2. So pretty ugly. On the other side of things, we were able to hold 72 on the NASDAQ, a little bit of a doji type of a candle here. Again, much like the rest of the market, continuation is going to be important. If we take out today's low, that would be taking out that 7,200 marker as well. We do have to contend with the flat old 200. So if I'm thinking indexes, if the market's moving down tomorrow and I'm wanting to trade into one of the indexes from a bearish perspective, it probably isn't the NASDAQ. It's probably more likely to be the S&P, or probably, I would probably prefer the Dow or DIA, something like that, or even the RUT. But with this flat 200, it's something, right? Some of these other areas don't have much. They'll be giving out those. So it has a little bit more maybe to hold up for it, holding 72 currently and still above that 200-day moving average. If this gives out and the market continues to sell, and it certainly feels like it wants to do that. Although with today's, we keep waiting for the Trump tweet to, when the market gets too grim, he steps in and starts tweeting nicer things, right? So it seems like it could happen tomorrow. It always could happen tomorrow. But on a technical side of things, really, we have 7,000, which we could, is certainly a number that I think we'll probably hear a lot of if we continue to sell in the NASDAQ. But really, from a technical perspective, I think it's a little closer to 69.30, 69.35, this swing low that not all that long ago was our pullback opportunity in the NASDAQ. So things not looking great over there either. Tomorrow's going to be interesting. It'll be a confirmation day for me potentially, and those are always interesting days. Over on the RUT, we did break cleanly below that 15, closing very much below that 15 again. Very little between the low, the intraday support that we set up here today, and at least in my mind, our next real level of support down at that 1460. And so really not a lot beyond 1460. There's lots of little things on the RUT. We many of us remember them from days gone by. This is certainly going to be an interesting one at 1440. This was an old breakout point. We've tested it as support. Certainly that next line after that 1460. So downward movement on any of these indexes, maybe not the NASDAQ, although I would expect that if all these other indexes are doing that, it will follow suit. Will be giving me confirmation that we've are really have to be careful from that bullish side of the equation. So we will see. We saw some interesting fight here today. What was really interesting as we kind of move over into our sectors, as ugly as pretty much everything looks, you actually saw the material sector able to claw out a win today. The only sector that was able to do that, and it wasn't by much, but after our gap down on the open, unlike the rest of the market, we really just kind of started to kind of try to trend up immediately on the intraday over in the materials sector, showing at least a little bit of relative strength here for today. I don't know that we want to get too excited about that. I think from a bullish perspective, being on the right side of 54 is going to matter to me. I'll be watching that 9. That 9 is going to become kind of that first, line in the sand for the bears in my mind as we're moving forward. That is, of course, a potential resistance catalyst. Getting back above 54 would help us recapture that. On the support side of things, I mean, there's little things and there's lots of little things pretty much everywhere we look, but really down here at 52 is kind of that next support zone that I'll be kind of keeping an eye on over in material. Certainly not a great look. And good afternoon to you there as well, Marquise. Always good to see you, and hope the market is treating you right, my friend. Over in energy, nice bounce back here too. And this is kind of the thing that we saw, pretty much, not everywhere. Utilities pretty much sold all day long, closing at the lows. Real estate wasn't too far behind them, but most of the market really did fight back here today, which means I think we have to use today's low as confirmation. Now, not everyone's going to agree with me. I understand that, but I know I have to use today's low market-wide as confirmation because, well, it seemed to be important, at least here for today. As long as we're below 61, you guys know that this has certainly been, if not my most bearish area, certainly one of them. And as long as we're below 61, I will be, very leaning bearish, I guess I will say. But realistically, any retracement up into as far as 63, I will be looking from a bearish retracement opportunity. This continues to be an area that I think, independently of kind of what's happening in the market, is looking pretty darn weak. Many of these sectors are kind of looking like, well, they look like the S&P, right? We've seen, many of these all or nothing type of markets before, but to me, it seems like energy is showing kind of its own personal set of weakness. And what's really interesting, if we look at this chart, and I know many of you guys will remember from our big sell-off in energy last year, I mean, we really don't have support on the ETF until we get down into the $55 range. Just no history there to really stand on it. So this breakdown here, again, anything can happen, but there's just no real support to prop it up. Most of the other areas and most of the stocks that we're going to, that we look at, they're going to have some support zones. We could say, yeah, maybe that could be catch it. Maybe that would be a tempting price for maybe a different type of trader than me, but there are lots of different types of traders than me. On this one, I just don't see it. So continues to be a pretty darn bearish area. Some of these things are kind of extended a little bit, or at least they may feel a little bit extended, but certainly not all of them. And certainly that doesn't mean we can't keep an eye on some bearish retracement opportunities, right? Exxon already, clean breakdown after a little bit of a K-trade floor started to develop. I know we took a peek at a few of these, but these are big names within this space. Somebody who hasn't broken down, that's knocking on the door, I'll just steal that line to save myself the embarrassment of drawing one in real time. Chevron, again, you kind of look at Chevron kind of like the XLE. Really, where's, I guess we have a swing low at 113, 113 or so, a swing low here at 107, not a lot of strong levels of support there to hold us up. Probably a more interesting one to my eyes, at least, than Chevron, at least from that bearish perspective, is COP, kind of building that little floor. Maybe it turns into a retracement. That floor gives out, really no support until 56. There's room in my mind to the downside on a lot of these energy stocks. I continue to take the same approach. I am really not interested in energy from a buyer's perspective. Doesn't mean I have to go bearish. It certainly doesn't mean I have to go bearish tomorrow, but I'm really right now at least only looking for bearish opportunities within the energy space. Not a whole lot has changed over there. Over in financials, giving out that support level, but fighting back, kind of closing right there. So again, kind of one of those upward movement could maybe say, hey, this was a fake out, right? Downward movement could be confirmation on the ETF. It's the banks. We've talked a lot about them. It's not only the banks by any means, but they are kind of showing some of the more weakness. You have still pullback things out there. Lowe's Corp over in the insurance side of things, nice little doji hammer type candle right at that 20-day moving average. You have Chubb, another one of them over in the insurance space, kind of a pullback opportunity, at least kind of in the works. So it's still, I don't like it as much. I think it's hard to like just about anything as much from a bullish point of view today as maybe you did a couple of weeks ago, but still an area that I am open to probably from both sides of things. On the bearish side of things, I think probably, there's a couple interesting charts out here. Goldman Sachs hanging right at a pretty clear and, at least in my opinion, identifiable support zone after a gap up on earnings to start the year. Basically, we've gone sideways on Goldman Sachs, right? We'll peek in on the weekly chart, gone very, very sideways. If that support gives out, I don't know about you guys, but I would certainly call that a bearish breakdown. So there's still bearish breakdown candidates out there. A little bit of a different look would be on something like a T-row. My O button on this computer is grumpy, kind of hanging right at a support zone as well. Already violated trend, already setting a lower high. Kind of looks in some ways like the financial sector, right? If this support gives out, there's, that would be in my mind a bearish breakdown as well. So I think there's opportunities potentially on both sides in the financial sector as we're moving forward. I think, again, you guys know me, and I know you guys all do this. We have to be cautious, in these type of market conditions, really wherever we're at. And I certainly know that we can't only look for opportunities to buy, right? That's why we've been very, all of us have been looking for bearish opportunities. Some of us have been more bearish than others, but I don't know any of you here, any of you that I've been talking to anywhere else. Nobody has been a perma bull over the month of May. And of course you haven't. So over in industrials, I want to take a closer look at industrials. They're kind of an interesting place right now. So first things first, we did close below this low. And I think we have to call this 73 a zone, but we did show a lot of bounce back, just like the market here today. So I don't think this is confirmed. Breaking today's low would be the confirmation of the breakdown, which could open up some interesting opportunities. If we see some upward movement, it was a fake out, at least in my mind. There are some interesting things out here. We've looked at some of the bearish ones, and there are plenty. You've got CAT still kind of dancing, and you could even potentially, at least in my opinion, set up a trade on CAT as early as tomorrow to the bearish side if we take out today's low, already breaking that support. Of course, that would have to break today's low, and I'm not, of course, trying to tell you guys what to do, but I would argue that if this breaks today's low tomorrow, that could be a tradable opportunity. But you still, you have things. We looked at the defense industry yesterday, looking, potentially even nicer. NOC, no confirmation candle, but a pretty nice looking pullback, a pretty orderly looking pullback. A little bit of declining volume here today as well. Lockheed, another one. I think maybe NOC looks a little cleaner, but that's probably a preference type of a thing. Certainly a pullback. You also have the waste management companies like Waste Management and Republic Services, kind of very similar. Little bit of a pullback into those rising moving averages. On the other side of things, you've got Boeing continuing to just hang below that breakdown point, with kind of just a swing low down here from last week is kind of that last leg in the sand, and probably looks a little more intriguing if we sneak over to a weekly time frame. A little bit of a breakdown and just waiting for that weekly confirmation. Certainly not a great buying chart, at least in my mind. So again, an area that there's some support. And I know we looked at some of the big players within this sector yesterday. There's opportunities if that 73 zone holds. And again, that's an if, make no mistake about it. But there are also, bearish opportunities. UNP, the railroads have been strong, but now all of a sudden we failed the breakout point. We've broken the 50-period moving average. We've, technically put in lower highs, at least in my mind. So a little bit of weakness over there. Honeywell, probably a little bit of a different side of the coin. I don't know what you do with Honeywell just yet, so I'd probably look elsewhere. A little upward movement, maybe you could call it a support bounce off the 50. A little downward movement, maybe you could call it a break of the 50. So, UPS, of course. So there's going to be, I think, interesting opportunities whichever way the market goes within this space, and maybe independently of the way that the market goes. I mean, it's hard not to look at NOC and say that's a pretty clean looking bullish retracement. Hard not to look at waste management and not feel similar to that. But on the other side of things, yeah, there's certainly things that we could be looking at from a bearish perspective. And like we've kind of talked about the last couple of weeks, if and when we cleanly give out that support zone, and I just don't think you can say that we did that today. It's more zone than number, as you guys know, and I don't think you can say that. I guess I keep hitting the wrong button there. And good afternoon, Joel. Great to see you. Great to have you with us. Hope you are doing well, my friend. Where is our industrial ETF? Let's peek at it one more time. So I don't think we can cleanly say that this is broke. Downward movement, I think we could make that case. Upward movement, I would at least call it a fake out, at least for the time being. So in a very interesting spot, very interesting candidates on both sides, in my opinion. Yeah, maybe a few more to the bearish side than the bullish side, and the average chart, to me, does look a little more, maybe less bullish and more bearish. But there's still some interesting, bullish opportunities, I think, in the industrial space as well. Awesome. There you go. Yeah, Joel. Yeah, you've seen a bear or two. I've never actually seen a live bear in the wild. Unfortunately, well, I guess probably fortunately, it'd be a cool story, but probably for the best. So over in tech, much like the NASDAQ broke down, I'm still looking at that 72, and much like the NASDAQ, we do have that flat 200. I don't put a lot of weight into a flat 200, but I think it's unwise to ignore it at the same time. Swing down here at about $69. Beyond that, so an area that maybe has a little more room to the downside, but also has maybe a little more things propping it up from a technical perspective, at least as of right now. So again, it's hard to really like tech from a bullish perspective, I think, right now, at least while we're kind of in this really jittery phase of things. But I don't think it's the place that I really look at and yeah, this is extra bearish. I know it's been a little while since we kind of walked through some of this, but Apple's held up well. I mean, the chart doesn't look great, but it's kind of held up well this week, at least so far. That's not a great chart. You've got the Visas that still, I mean, we could be talking on Friday a breakout on Visa, if the market rallies, that's close enough. Certainly still holding trend, still, has a higher low here for sure. Intel, yeah, it's not great, and I certainly don't want anything to do with it at this point, but it's starting to at least try to build a floor after this just dramatic plunge that we've seen. Cisco, it's going to be really difficult for me to want to bet against Cisco, and we still have a swing low way the heck down here. This could, potentially rally into a cup and handle. We need some help for that to happen at this point, but still hasn't broke support, although certainly these charts aren't necessarily pretty, but they're not necessarily as ugly as to me, at least, as some other areas. The MasterCards, the Visas, though, I mean, they could still be potential breaks. The Adobes of the world, I mean, kind of in a little bit of a triangle at this point, or a little bit of symmetrical triangle forming, at least, break to the upside, I think you could argue is a bullish tradable pattern. So it's not as rough as some of the other areas to me. And maybe that's, simply because the NASDAQ hasn't broke, or, it's got more propping it up, or whatever it is. Then of course, Salesforce here, kind of nice clean floor that they've been kind of dancing around for a little while. So if I'm looking bearish, right or wrong, I'm probably looking elsewhere, at least collectively speaking. Don't really think it's great from a bullish point of view either, but certainly I think there's uglier areas out there. Over in staples, much like the market gap down on the open, kind of rallied up off of the intraday, kind of closing right at this old support zone. Again, much like the rest of the market, very much like the industrial ETF, tomorrow's candle, well, could show us nothing, because we could have an inside candle that gives us nothing. I don't expect that in today's market, but that's an option. Upward price movement, I'll say we caught that and held, and above the 50, probably an area that might be interesting. If we break to the downside, take out today's low, I'll call it a break of trend and treat it accordingly. So I think today's candle doesn't give us the information. It gives us potentially the information tomorrow, much like the industrial ETF and much like a lot of things out there in the market for, downward move confirmation, upward move, a little bit of a fake. And so definitely not a ton of strength, but we have, and again, we've seen this before. The more defensive areas, I would expect that they'll simmer down if the market's going to continue to work to the downside. But early on, that generally is not the way it goes, right? We haven't seen that here in staples here today. But you do have things, again, it's not perfect what is from a bullish point of view, but kind of testing it right below its 50 period moving average. I thought maybe I was thinking somebody else, maybe it was Pepsi I was thinking, and not Procter and Gamble there. And so a little bit of a pullback, candle upward movement. Again, in these conditions, I don't know how I feel about that, but it is what it is, right? Just because I don't feel great about it. So there could be some areas on the other side of things. You saw Tyson really give out. And so some of these things that have shown some really good strength in their trend, like a Tyson, really did give out here today. So I still will be okay with looking at this really from both sides of the coin as I'm moving into the rest of this week at least. But hard to be as happy about it as maybe we were, just last Wednesday at this point. On the utility side of things, more selling. So no safe haven money has come into the utility sector, unlike most areas in the market today that kind of gapped early. We're able to kind of find a little bit of a footing, put together a big, intraday candle with a lot of movement. Over on utilities and real estate, it was basically drifting to the downside all day long. We did see a little bit of a volley, as probably I would have guessed some short covering at the very end of the trading day, but really the bears were in firm control of the utility sector all day long. And so definitely right now, if we're looking at this from a pullback perspective, and I am, it's not tomorrow, at least technically speaking. Now, we did kind of catch right into these moving averages, right in that 50 period moving average on the ETF. A little bit of a turnaround candle could tempt me on Friday, but I need that turnaround candle. Right now, if we don't get that, we have to be a little concerned that this is a fake out, and we're back right into this old trading range. If we go in and take a peek at some of the players within this space, many of them are going to look very similar to that. A knee, for example, nice, well, not nice, deep, fast pullback. No real reason to believe, whether it's from a candlestick perspective, an intraday perspective. I guess maybe if we look at, a 1 minute chart, maybe, I don't know, but, if we're not getting too crazy, no reason to think, in my mind, tomorrow is the day, but still a pullback opportunity. We slow down a little bit into some smaller candles, then maybe we can talk. You're going to have a few others out there like Duke that looks like it was kind of along for the ride, with the strong movement that we saw in utilities. This is not what I'm going to be looking for personally in the utility space. It'll either be XLU or the knee type of setups that have pulled back and ultimately created some sort of a confirmation turnaround candle, as opposed to sweet deal on the Dukes of the world. Probably would lump D in there as well. But AEP, another one that's shown pretty darn good strength, kind of pulling back into those averages. If we see some slowdown, could be a pullback area that I would be interested in. Right now, we certainly, these last 2 days of fear, I guess we should probably call it, at least worry in the market. Certainly that money has not moved into the utilities. It has moved out of them pretty quickly. This has been pretty steep selling these first 2 trading days here in the utilities. Not overly surprised, because we've seen this many, many times. When the market's breaking down, pretty much everything is fair game to sell, right? If we start to simmer down, could be an area that I would be looking. But we do need to create a higher low than 57 for that pullback to be an opportunity. This would be a good place to start XLU if you want to do that. And hey, thank you, Joel. That's awesome to have you here with us. I'm glad to have you. And over on let's take a quick peek at healthcare, then we'll get into real estate. They look almost like utilities. Over in healthcare, working right back into that support zone. Another interesting area from both sides of the coin was, I threw them up on Twitter and I didn't take a closer look at, was it Allergen? No, who the heck was Alexian? I think it was Alexian. Nice little breakdown here today, breaking support, breaking below the 200-day moving average. So some pretty darn bearish things out there. So that's funny, Marie. But you have things like the UNH, and it's not pretty, hanging out at support, kind of sitting right at that old breakout point with a pretty decent looking candlestick here today, kind of holding the trend. And I don't know if this is going to be perfect. It probably won't, because I can't draw lines perfect anyway, but we have those characteristics of the upward trend settling in at this support zone here. Yeah, I'm looking for opportunities back into the utilities as well, Marie. I still need at least, I need a doji, a hammer, a small body candle that I can work with tomorrow, or whenever, ideally tomorrow, because I don't want to pull back too much further. That's going to start to concern me. So I need it sooner rather than later on utilities, if for the pullback to look like I hope it looks. It's just moved faster. I don't mind the way that where it is. I just don't really love how fast it's gotten there. But I do think it's an area that can be tempting to me if things line up in the next couple of days. So over back onto healthcare, we've got breakdowns on Alexian. We've got potential pullbacks on the UNH. I'm sure Anthem looks very, very similar as well. I think UNH looks a little prettier, although this might look a little more interesting. Break to the upside. That's some work to do. But you have things like Lilly, and certainly testing a pretty darn. We got a little room, but in my mind, a pretty clear level of support, and the 200-day moving average, a break below this, that would be a pretty darn clean looking breakdown. Of course, we all have taken a peek or two at CVS as of late, knocking on the door of a potential breakdown. So with the utilities, with the healthcare sector here, hanging at a little bit of a support zone, could be a price that's important to hold for some of those stocks that, like the UNHs and the Anthems and things like that, are maybe showing a little bit of turnaround to them. If this gives out, that might make them that might hurt the way those patterns are looking. If this holds, that might actually help, might be an interesting way to look for some bullish delta in the days to come, in my mind. So this continues to be an area that I don't think the ETF is super helpful one way or the other. I think, much like the market, this is very much a stock picker's sector right now. CI, CI. Let's go take a quick. Thanks, Scott. CI not looking great either here today after kind of working back. And I think this one is the one that I like, I think really a little more pronounced on the weekly, if I'm not mistaken. Yeah, I mean, I have to kind of forgive my line there. But I mean, this was kind of a big breakdown on the weekly chart, and big double top, big breakdown, breaking below everything. Yeah, that's not a pretty looking chart at all. You're absolutely right on that side of things, Scott. Ugh. But and again, potentially a breakdown. I'll just steal this right here. Hasn't happened yet, but a little bit of a break, below that support level. So there's still opportunities on both sides of the coin. Like I said, there's just more, I think, right now on the bearish side than the bullish side. That doesn't mean there's not at least a few out there that are interesting from a bullish point of view. Over in discretionary, much like the industrial sector, financial sector, tomorrow's candle is kind of the one I'm looking for that confirmation. This 112 has been a pretty important place. Many of you guys, we were watching this together, waiting for it to break for our for a good buying opportunity not all that long ago. An important price in my mind on the ETF, much like the industrials. Confirmation candle potentially tomorrow below today's low. Probably shy away from it for the same reasons that I'm going to shy away from tech in the short term. So yeah, absolutely, because it's just a few more things to hold it up, right? Whereas not as much to hold up the industrial sector, in my mind at least, right now. Just as one example. 200 swing low, but breaking below this 112, certainly not a great look by any means. Taking a look at some of the names, what that probably means is you've got Amazon. I mean, you want to talk about a bearish breakdown, I don't know about you guys, but a break below this. So yeah, absolutely, Marie, a break below this, lower highs, again, much like the market, really where's support? 1760 at the flat 200-day moving average, because we can extend this out a little bit on Amazon. And we've got, pretty good chunk of history in this ballpark. So, much more downward movement. That 112 cleanly gives out on that ETF. Probably means Amazon's breaking this support. No guarantees, but probably does. Home Depot, it does not look like something that inspires confidence to me. We still have McDonald's, deep pullback. I don't like this type of pullback, especially in this market type of conditions. But that doesn't mean that somebody else out there doesn't. As of right now, we still have a higher low. I still think a break of McDonald's is what you're looking for on that side of things. Nike breaking down here today, that's pretty darn ugly. Maybe it's not something to, something that I really love the way to look to trade it maybe, but nice breakdown, breaking below support, breaking below the 200. Starbucks probably hanging in there a little bit better, but no longer even above that 50-day moving average. Low actually had a bounce back, but this probably fits into the bearish retracement world, or build a 3 or 4 day floor and then break it for me type of a situation. So much more downward movement, much more selling broadly speaking, or just individually within this sector could really start to turn many of these charts. Even again, some of the good looking ones, it's hard to say Starbucks looks terrible or, McDonald's looks terrible, but it's hard to say that they're the exciting, bullish charts that they were in the very recent past. And Abel wants to take a quick look at FCX. Absolutely, we can take a quick peek over there. So on the FCX front, this is certainly in an interesting place. So let's come into a weekly. I know we're over in the materials, but never unhappy to look at these, at anything with you guys. So we're kind of hanging right at the door of on this weekly time frame, some pretty interesting support with not a lot below that as I'm kind of looking at this chart, Abel. And so this support would be very important to me if I was a long-term owner in FCX. Can't really love the weakness, can't love the way that we've worked back into it, hasn't broke support. But to me, this could be one of those things that if we're hanging at support, for a week and we break to the downside, could be, I'd call it a bearish breakdown. Whether a tradable one or not, I don't know necessarily, but I would call a break of that support a bearish breakdown. Below everything, I think we're showing a lot of weakness. And one of the concerns that I think maybe we can have, on, the metals in general, not just FCX here, is we were really struggling, in April, where the market was kind of in that nice, smooth upward move, at least for much of the month. Now showing up a little bit better as we're kind of hovering above that support level. So I'd be looking into weekly timeframes personally as a long-term owner and kind of identifying those support zones, what could potentially prop us up. And there's just not going to be a whole lot, as you can kind of see. This one that we're kind of just north of right now, we do have some history in that department, but to my eyes at least, certainly don't know the future, but to my eyes, if this support gives out, I don't see any reason to want to be a buyer of FCX until we approach $8, because there's really not any technical reason in my mind to be one. So I'd be keeping a close eye on this support zone right here. Don't really think there's any signs to believe other than that support, which, hey, last time we got there, it was looking pretty ugly too. And well, and turned around really quickly, right? Beyond the price action, not really, in my mind at least, a lot of great reasons to expect a turnaround in the short term, at least here on FCX. I would say for me, and I guess for my rules, and that would probably come into a rule thing, I would think that I would either already be hedged personally, or if I was not, I would look for those hedging opportunities if the support broke. Basically, I don't want to sell at support, if that makes any sense. So in some ways, if I'm an owner and I'm looking to hedge, whether it's buy a put, sell a covered call, whatever it might be, I'm not going to look to do that at a support zone. I would look to do it at a resistance zone or a break of support, if as a general rule. Now again, the price will always dictate that, and I'm never going to fault anybody for rolling a call down or starting selling calls against that. But when I'm kind of thinking just generally speaking and not specific to FCX here, when I'm kind of thinking about hedging, I always kind of want it to do when I break some support, right? If I break this support, and just play the hindsight game a little bit here, if I break this support zone, if I break this trend line, if I break the 50-day moving average, whatever the catalyst is going to be, it can be different things in different charts, of course. That's where I kind of want to look into the hedges personally, if that makes any sense. But like Marie said, rolling the call down, certainly always an option. And while that's my preferred style of hedging, doesn't mean it's always the right style. If this does break support, hedging today is a much better idea than waiting for it to break support, right? So just my personal style is that's kind of where I like to do that type of thing, but not a lot of great strength. I mean, this is a support zone, and we should always expect support to fight for us. It doesn't always win, but I will always expect support to fight for me, because I think that's just a good rule of thumb. So hopefully that gives you some ideas there, and good luck with whatever you do. And I'm probably going to just mess up your name terribly. So Amrit, I do not trade in the Indian market. Pretty much focused, as a almost exclusively on the U.S. Every now and then I'll look into, ETFs, for different areas, but not really my style of things. Really focus on the U.S. side of things the vast majority of time personally. Over in real estate, much like utilities, drift down, drift often, really didn't show the strength and resiliency that some of the other areas in the market did here today for whatever reason. Had that nice volley towards the very end of the trading day, but hard to really say too many things positive. Again, an area that I think we still are looking for at this point a pullback opportunity, but don't love that as much if we give out of this support level that we're kind of hanging on right here at this point in time. So, and Majin, we'll take a peek at J&J here in a minute if you would like to do so, but really quick, let's go in and peek at a couple of these real estate companies. Again, we've seen a lot of selling everywhere, and certainly these more defensive REITs and utilities that generally are areas I think buyers are looking at when things are a little tougher. They've certainly not had any strength so far this week, but you look at their charts, and at least as a collective unit, now SPG, well, they've been terrible before today, right? They've been showing a lot of weakness, but AMTs and the Crown Castles of the world still kind of in a pullback. My old friends over in Prologis, not the greatest look, closing below the 50 below support. So yeah, this is an important price on that ETF. Few things are looking all right. PSA still in a pullback opportunity, still holding up. Probably could say the same thing with EQIX here, and you could probably say the same thing with Well. Some of these aren't looking as strong, though. My favorite REIT for whatever reason is Prologis, and certainly that's not a great look. Won't be my favorite REIT for a pullback in the days to come. That's for sure. So you betcha, Joel. Really quick here. So we'll just, again, much like utilities, I think when we're looking at real estate, we've got to wait for that turnaround candle. I think it's important that we get it sooner rather than later. With where we are on that actual ETF. Just taking a quick peek here for at J&G for Majin. Yeah, hard to be positive about this chart right now. I certainly don't think there's any reason to think it's going to just start being bullish tomorrow. Breaking support, breaking that 200-day moving average, probably breaking everything on the weekly time frame as well. It's hard to be very positive from this. Now, there was a lot of selling here today, much like the market rallied up, but I wouldn't look at that other than, a lot of, there was profits to be had. The market started rallying up. I'd be looking at this 134 as the first kind of level as resistance on this chart myself, as I'm waiting for that 9 EMA to work its way down. Right now, I would say, yeah, if I can't think of any one reason, Majin, to be bullish on J&J from a technical point of view. Whatever it does or doesn't do, I think the smart money is going to be saying, yeah, this is a bearish chart. Can it rally up? Can it be bullish the rest of the week? Absolutely. It could go up tomorrow to 132, up on Friday to 133. I'd still think it was a bearish looking chart. Heightened volatility with the news, and so that's always something that we have to consider how that makes us feel. And we have to be, when we're dealing with more, things that are kind of, getting hit by news, like these guys are, like Boeing was recently, or earnings in general. We have to be willing to take on that, extra risk, so to speak, that it could work both ways, though, right? That could just easily work our way as opposed against us. So I would expect maybe a little more volatility in J&J than maybe normal volatility for J&J in the short term as we kind of play this one out. But yeah, right now, really no signs from a technical point of view, at least in my opinion, to think that tomorrow's the day that Johnson & Johnson turned around. It's going to have a lot of work to do before that chart even starts to flash even shorter term, probably bullish signals. Even looking at an hourly time frame, we came off of those lows pretty nicely here, but we haven't even tested the 9 hourly, right? So not a lot of faith that that chart's going to turn it around here tomorrow. And lastly, over communication services, hanging right at that support level. On a chart perspective, it looks kind of like Amazon, right, where we've created that lower high and hanging right at that support. If that support gives out, really not a support zone, at least until we get to that flattened out old 200-day moving average. Generally, I don't like this as a vehicle, as you guys all know. So going to take a look at some of the individual components. Held up okay realistically here today. Let's actually just go into it. So I have to jump through everything there. Facebook holding up all right. Google showing a lot of weakness and knocking on the door of a breakdown, right? I argue breaking today's low is, more selling should happen if that happens. Still have, Verizon still holding the upward trend. I don't think that our Comcast gave out. Oh, it's right at the 50-day moving average, right at this old support zone. Pretty important price point for it. Yet Activision, Blizzard, they're not one of the top holdings as of right now in this space, actually holding up pretty nicely this week. I mean, the chart's still pretty ugly, but it has shown some relative strength this week. So again, much like some of the other areas, I don't think that this is going to be the bearish place for me for new bearish trading opportunities collectively. Showed a little bit, Facebook has shown some pretty good resiliency, in my opinion, during all of this. And so, anything that we, I don't want to, be bearish on things that have been putting up a fight. Right now, well, I don't love the idea. If you said I'm buying Facebook off the 50-day moving average, I'd get it. I wouldn't love it, but it would be more about, everything and not specifically Facebook or its chart. So I think this area continues to be one that I don't really feel particularly strong about one way or the other. And most of the charts I'm looking at, I don't really like one way or the other in that space as of right now. But on the ETF front, because you may disagree with me, and certainly that is fine. On the ETF side of things, the support level should be an important price. This thing giving out probably means that Google has continued to sell, potentially means that Facebook's breaking down, which would show, pretty good weakness over on the ETF. As we move into our commodities, that dollar, nice movement here today. Again, just kind of comes down to how are you playing the dollar? Are you buying the dips? You waiting for a specific breakout opportunity? Continues to show good strength, and that's nothing really has changed over here. Kind of fighting with those bodies on that weekly time frame. Again, I have really no objection as long as it's within the system. How anybody's arguing to play the dollar to the bullish side right now, but really nice move off of that little pullback, knocking on the door of those bodies on those weekly candlesticks. I think that is a good confirmation point. Of course, we still have a couple days before we have finished that up. But I do think that is a strong signal if we get it. A little bit of back and forth, not a whole lot has changed over in gold here today. Really support here. And again, kind of like we talked about yesterday, if the market is going to, sell, quickly, and it may or may not, right? Certainly today it gapped and held its own. I could be interested if we get back above this 1290 area, this little resistance zone that we've tested before, using it on the intraday currently, the 50-day moving average. I'm not to the point where I would say I am interested, But I am more interested in potentially bullish signals on gold than I have been for a little while. On the other side of things, a break of 1268 is certainly there. I think maybe you could kind of argue that this is a weird looking bearish retracement, but I don't think within this range is a great place to trade gold personally. And I don't even know that a break of either way, I'd call it a signal. A break up, I'll call that a bullish signal. A break down, I'll call it a bearish signal. I still don't know that it's something I would want to play either way, but at least we have a pretty good idea of where our support zone is. It's held for quite some time and developing some pretty decent little short-term resistance. So if we break to the upside, well, at least we know where, that could be a buy signal for some of the gold bulls out there. On the other side of things, silver continues to look a lot more bearish, and basically it's bearish or bust on the silver side of things right now after yesterday's selling, where they're looking for a little bit of retracement. Right, we kind of caught a little bit of our footing on the hourly, on the intraday. We kind of start to work to the upside. So it's either a breakdown, build a little floor or break down, or get a little bit of a bearish retracement. I do think we can call these swing highs at 1460, 1462. It looks like here as our resistance level, or our first level of resistance. Beyond that, we've got lots of things, right? This is going to be probably the first one that jumps out, old support zone, old swing high. That's where our short-term moving averages are. So at least line in the sand wise, as long as we're below 1462 here, below this support and old support, new resistance, have to be looking bearish and bearish only, at least from a swing point of view. Don't think I'd be feeling very bullish if we were to break to the upside, but I would say it was at least a little bit of a win for the bulls out there. Natural gas keeping us entertained, if nothing else. Nice bounce back here today. Now we're kind of working right into, and let's go to a 4-hour chart, see if we can clean this up a little bit here. That going to work? So yeah, so we kind of had that nice little upward trend. We kind of ran into the 9 weekly, the 50 SMA. We kind of broken that trend, kind of rallying back up here today. This thing is still really undecided, showing a little bit of strength coming off of those lows, but still below, our averages, but fighting the good fight. All right, we're fighting now 3rd week in a row, candlestick wise, probably 4th even, fighting that 9 EMA. So I'll continue to watch that. A break above that I do think is a bullish signal, and that would also line up with a break above that 50. Now, as we saw last week, it looked like it had a good chance to do it, and then it lost the last couple of days, right? There's still plenty of week left. So I still think for signals in natural gas, we need that weekly chart to be working for us. So we'll just peek back in on these guys here tomorrow. And lastly, over crude, a lot of movement here today, but still in this same $58 to $60 trading range. Did put our nose just a little bit below that very briefly here on the intraday, but a close is a close, as I've, probably say too much, but so we're finding ourselves right back in this trading range. I think the ideal scenario for us is spend another week or so in this trading range and then break to the downside from a technical point of view, but that could drag out a little bit to even potentially a break to the upside. I think while we're in the middle here, I think I would lean to the bearish side of things. We've made lower highs and lower lows, so if I had to trade into crude right now, it would be from a bearish perspective. But realistically, I think we need to come out of this 58 or approximately 58 to 60 range before we get our trading signal. So unless it's kind of something neutral or playing intraday, which there certainly was some movement there today, I continue to shy away from crude as we're doing this dance between between support and resistance. I would like to see us retrace into 60. I don't know, today's candle is going to kind of throw that off, but there's, you never know till you know, right? For some potential selling opportunities that could be interesting. I do expect 60 to be a very important test, and I expect it to be very difficult to get above 60. So if it does get above 60, maybe we'll talk again from a bullish point of view, crude. But until then, and I don't really expect that to happen, but until then, I'll be looking more for selling opportunities. Just don't think it's a great environment, kind of stuck here in the middle, especially when we're seeing things breaking support, in all sorts of different areas in the market, right? I think there's a lot easier charts to try to trade from a swing trader's perspective than crude right now. So, wow, there we go, ladies and gentlemen. I know I kept you a little longer, but it was one of those days. I think it was one of those days that I can only speak for myself. I need a little more time with the routine, take a closer look at some of the different components of the indexes with where we are. Closing below 28, below 15, below support on the Dow. Hard to say that's a good thing. The only good thing we can say is that we held our own after we cheated, right? And I know that's not the right word, but we cheated. We gapped down on the open, so we didn't break it the old-fashioned way, run into it and then falter, right? We broke down on the gap to the in the futures market. A close is a close, but is a little bit of a cheat. At least I always look at it as a little bit of a cheat. I'm going to be looking at tomorrow's price action, off of these highs and lows, particularly the lows, for that confirmation, going into some of, a little bit more bearish stance. But there's plenty of bearish things. There have been plenty of bearish things. Just again, kind of like we've kind of had to shift a little bit, right? We went from really looking at the beginning of May predominantly bullish to slowly but surely looking more and more and more bearish. Now I think we can, need to just remind ourselves that there's opportunities on both sides. Is it more skewed to the bearish side? I would argue yes. I think most of you would agree with me, if not all of you, and say thanks for pointing out the obvious. But that doesn't mean we can, should ever ignore anything, right? We're traders. That's the great part of it. We can be on both sides of things. And you are very welcome, Patricia, Scott, Majin, Marie, Adib. Always a pleasure. I appreciate you guys hanging in there with me as go through the recap. And have a great week, Marie. We'll see you next week for sure. Everybody, thank you so much for your time. As always, it's more fun to do this with you guys than on my own. So thanks for hanging in there with me today. Of course, we've got our Bind to the Trader going on here tonight. Coach Mark doing the evening Traders Lounge for our pro members. So have a good time in there. Tell Coach Mark I said hello. If you see him, it should be a lot of fun. I'm sure you guys will have a great time over there. If you're not a pro member, of course, you're always invited to head on over to tackletrading.com. We can get you set up with a free 15-day trial. You can go listen to Coach Mark's words of wisdom and madness here this evening. Coach Mark's a smart dude. There's no doubt about that. An interesting character as well. So if you're new around here, of course, welcome to Tackle Trading. Be sure to subscribe to the channel and hit that notification bell and join us over on Twitter at Tackle Trading, at Frank Martin 23 for me. Also, be sure to head over to the Instagram page here. I've got a little bit going on over there. Got Match. You'll take a closer look at Match over there, as well as CMG. Should be set up here probably by now. So I'm looking forward to. I already caught Match. See what Noah has to say about CMG. Should be a lot of fun as well. So if you get a chance, definitely go head over to the Tackle Instagram too. Probably enjoy what the take over on CMG and Match as well. So thank you so much, ladies and gentlemen. You guys get out of here. Enjoy the lounge here this evening for all our pro members. If you're not hanging out in there, and even if you are, I'll see you tomorrow, same time, same place. So should be another interesting one. Follow the rules. Don't be reactionary. Know what you're doing, why you're doing it. And whatever the market throws at us, we'll be all right, right? So thanks a lot, guys. Get out of here. Have a great Wednesday night. I will see you same time and place here tomorrow. Bye, everybody.